Welcome, everyone. It is Tuesday, so I'm sure you've been waiting a full 7 days by the computer for Vetted VA Live here. We get together every week. We have expert realtors and mortgage professionals vetted by Vetted VA here to answer your questions, go over a topic in detail. But remember, every week, our most important purpose here is to answer your questions live. We can go in a little more detail than we're able to just when moderating your questions out in the forum. So definitely, if you have a question, regardless of whether it's on tonight's topic, throw it up over here in the sidebar, whether you're watching on YouTube, whether you're watching in the Facebook group or any of the other Facebook channels. If you're watching on Facebook and you have not yet subscribed to Vetted VA on YouTube, go out to youtube.com/@VettedVA and give it a subscribe. Lots of really good content, video content, deep, in-depth explanations of things. They're a little bit harder to do in Facebook. So tonight, we are going to be talking about a topic that is all over news, social media, headlines. Most people don't really understand it, what it means, and how they can benefit from it. So tonight, we're going to talk through that. So hopefully, if you're watching, you'll understand what a VA loan assumption is, when you can use it, when you can't use it, how it can benefit you. And if you're a seller on that side, the important things that you need to make sure if you're going to allow someone to assume your loan. So tonight with me, we have two experts on the mortgage and real estate side. I've got Gary Foote. Gary, you are in both coasts, or almost both coasts, Los Angeles and Nashville. Is that because we had too many Californians were leaving to Tennessee that you had to run out there and service them there because they weren't buying in LA?
Funny enough, I have someone doing that right now. Where I just listed his home a couple of weeks ago, and he's moving out here. But my family has strong roots in this area, and after about 20 years of being in California, it was my wife's turn to be nearer to family. So we made the move just about a year ago.
Got it. And then Carmen Pincus, realtor in Everett, Washington. Little bit different than Nashville. Couldn't be further across the country. But tell us a little bit about your market and your clientele and who you help there in Washington.
Yeah, I have a company that I started about 9 years ago, PCS Everett Military Home Solutions, and I work exclusively with active military relocating to and from Naval Station Everett and Nass Woodby, and veterans in the community too. So VA is all I do.
Awesome. So we have the right experts tonight, and let's just jump into it. Gary, why don't you walk us through what an assumption is? Most homeowners, most veterans, most people in the market looking to buy are probably aware of this idea of a mortgage assumption, but they don't really understand what it is. Why don't you give us a little overview of assuming a home seller's mortgage?
Sure, absolutely. So once again, one of the benefits that's somewhat unique in a lot of ways to the VA home loan, we have a lot of conversations of why are VA home loans such an incredible product? Well, this is one of the reasons why, is that a VA home loan is assumable. So that means that a seller who purchased the home at their time of purchase with a VA home loan and still has an existing VA home loan on that property has the ability to essentially allow a new buyer to assume their existing loan. And that is the balance of the loan. And so we'll get into that and probably in a couple points from here, but that's the gist of it. So if a home was purchased with a VA home loan and currently has that VA home loan in place, then technically a new buyer can assume that loan and all that comes with it, including the interest rate, which is, to answer your question, why it's a buzz right now.
Yeah, that was the big question. So Carmen, from that end, why are people asking about this? VA loans have always been assumable for the last 20 years. No one ever mentioned, hey, I'd love to assume someone's loan, or it was a very rare question to have come up, but people talk about it all the time. What in the world has changed in the market that people are now suddenly very interested in VA loan assumptions?
Rates are about double what they were this time last year, right? So we're coming out of record lows in the 2s and 3s, and now we're seeing rates in the 6s, 7s in some cases, maybe 5s last week. And it's hard, right? So it's a lot harder to qualify for the same price home than it was 3 years ago, 2 years ago. And so people want to know, well, how can I keep that rate? And you can, but there's a lot of caveats to that.
Absolutely. And just to put it in context, everyone's kind of aware that we have rates as high as they've been in 40 years. And you go, 40 years is a long time. It's 1982. I saw a chart today that the last 12 months have been the worst market for bond investors since, hold on, wait for it. You're not prepared for this, since 1788. It hasn't been as bad of a year. So not talking about rates shooting up as high. I'm saying someone invested in bonds a year ago in the last 12 months has lost more money than any investor since 1788. That one kind of threw me for a loss. So while we were talking and going over the basics of assumptions here, our third expert here has joined us, Gay Veal with Epic Lending. And Gay, I forget, you're in Colorado?
I am, yes.
Well, we're not even going to give you time to get warmed up. You are you don't get to go to the on deck circle. You are coming right up to bat.
Yeah,
so
no worries.
Tell us about that assumption. What does it look like? How is it different than qualifying for a loan? So you've located a property where a seller has a VA loan. Seller is open to the idea of you assuming their loan. What's similar to getting a new VA mortgage and assuming someone's VA mortgage, and how is it different?
Yeah, so the similarities are that number one, you use VA underwriting criteria in order to qualify for the loan. So all of the same rules, DTI, residual income, regardless of the borrower, if they're a veteran or not, they're still going to use those rules to qualify. So in that regard, it's the same, and the qualification standards, to actually get the mortgage are still the same. But there's a fair amount of differences. So I think kind of first and foremost, the biggest difference, which sometimes can be a deal breaker for people, is time. It takes quite a bit longer to process an assumption than it does a traditional mortgage or a traditional VA loan, using standard procedures. And some other differences are, some of the fees associated with the VA assumption are different. In most cases, the funding fee is different than it is for, traditional mortgage or traditional VA loan. And then the cost, I'm trying to figure out how to put this, essentially, the way you can't finance 100% of the purchase price in most cases. You're only assuming the loan that as it currently exists. So if there's a delta there, meaning that the purchase price, say, is $500,000, but there's only $350,000 remaining on the loan, there's $150,000 there that you have to come up with. So I would say, without talking for 10 minutes on the differences, I would say those are kind of the big major differences that you see in the assumptions. Of course, if my colleagues have anything that they want to add, big differences that I missed there, by all means, jump in.
Well, let's talk about another one. Who is able to assume a loan? To get a VA loan, you have to be a veteran and meet those eligibility requirements. Gary, How does that change if we're talking about someone wanting to assume a loan? Do you also have to be a veteran?
So that's one of the really unique parts about this particular caveat of VA financing is that you do not. However, if you are not a veteran or you don't have the appropriate entitlement, whether that's you don't have it yourself or you're not a veteran, so you don't qualify for it across the board, then the seller that you're working with could still be on the hook with their entitlement while you have that loan out that you assumed.
Well, let's talk about that. Carmen, why don't you walk us through from a seller's perspective? We can kind of bounce around. We have a bunch of topics, but they kind of lead into each other here. So from a seller's perspective, you go, okay, cool. I have a really low interest rate and I have a buyer out there who would like my low interest rate versus a current market rate. And they're not a veteran. So they would like this VA loan, has no mortgage insurance. What does your seller need to know about what Gary was talking about in terms of release of liability, substitution of entitlement, all of that fun stuff that you need to be coaching a seller through before they would entertain an assumption?
So if the person's not a veteran that's going to be assuming the mortgage, then the veteran who does hold the mortgage, the original purchaser, they have to leave their entitlement tied up into this loan regardless. And the only way to get it off of there is for the borrower to eventually refinance the loan out of VA or to sell the property. And so since you don't know how long that's going to be, I mean, if they haven't historically low interest rate, it may be a long time before they decide to sell or refinance that mortgage. And what happens if they get foreclosed on? If that happens, well, then that entitlement is gone. It's essentially forfeited. It's lost, and so that creates some challenges for the seller, the original veteran that purchased the home. Because they're going to have lost some of that entitlement, which means they're going to have less eligibility remaining for their second purchase. Although it does happen. It is possible to still buy even if some of your entitlement was lost. There's a calculation that your loan officer can do with you. It's possible, but it's limiting at that point.
Just, we talk about it because it does show up, especially for buyers. Buyers are trying to find every angle they can to make this a better market for them. But Gary, Carmen, either one of you, when you're working with sellers, is this something that's on sellers' radar right now, where they think this might be something that would enable them to sell their home? Or are they bringing that question to you guys?
For me, in the markets that I serve, it's not really on their radar unless I make it known that it's a possibility. So I think a lot of people, when they're looking at buying, they're not necessarily thinking in that moment, what are the benefits to me when I decide to sell this down the line? So it's just, how do I get into the home today at an affordable rate for myself? That's typically what happens. And so when we circle back on the selling side and I point out some of those features, so, I didn't know that was possible, but then I have to jump into it is, but, and then start talking about that, that but sometimes it's a big but, depending on how much appreciation has happened for that particular home, because that may pose some challenges moving forward. I think two things that I would mention in the same kind of sphere, and I'd love to hear, what Carmen has to say about this too, is technically all VA home loans are assumable, right? So people ask, well, where do I find them? Well, any VA home loan is technically assumable if the seller is willing to participate. But like we were just talking a few minutes ago, there can be some real reasons for reservations for a seller to participate. And so I just encourage you to think about that as you're going as a buyer, because a lot of times people get the notion of, gosh, these people must not really care too much for veteran buyers anymore. And it's like, no, it might not be that. There's just so many complexities here that have to align for this to really make sense for everyone. And the second thing is I would highly advocate for not paying for any type of service or paywall or anything like that on the internet. If you type in Google and say, where can I find assumable VA loans, and a website pops up and asks for your credit card information, please don't do that, because it's just a way for someone to collect money from you that they don't deserve. If a home is probably being actively marketed as assumable, then your trusted real estate agent is going to be able to help you to know that that one's being actively in your community marketed as a seller who's willing to participate in an assumption.
Well, let's say that you have someone come to you. I'm a buyer, and I hear this and I go, VA is zero down. I'm not a veteran, but I could assume it. Rates are lower. This sounds awesome. I want to do this. So Carmen, I want you to be my realtor. I want you to go out and find me someone to allow me to assume their loan. Well, how do you even answer that? How would you go about that? So Gary's telling us, don't go to any internet services that claim to have the magical honeypot of assumable VA loans. But let's say a legitimate buyer is wanting to do that. What would you advise them, or how would you guide them to maybe unearth a few where you could go and approach that?
Oh, excuse me. Is the buyer also a veteran? Because that might change a little bit about how the conversation goes.
Either way, why don't you say they are? You
okay.
Deal heavily with veterans, because it probably makes it a little easier. So let's
yes.
make it easier on you, because it's gonna be real hard for a non-veteran to find that. Let's assume that you have a veteran buyer and you're in your market looking for potential sellers for them.
Okay. Well, I mean, maybe Gary takes a different approach to this, but my very first thing is regardless, I'm going to pull a search for whatever they're qualified for up to that point. And anything that meets their criteria, I'm then going to look through and see, is there anything about the home that would make it difficult with minimum property requirements? And if there's something that stands out really strong, I'm going to exclude those from the search immediately. And whatever's left over, we can search through, or not we, I will search through and determine what type of mortgage this property was purchased with, and that is verified through tax records. I don't know if all counties record as much data as Washington state counties record. We actually record quite a bit, and so it's very simple to tell if a mortgage is VA or not with ours. It's an added step to take, but your real estate agent is the one that should be able to pull that up for you fairly quickly and easily and reliably. And then from there, the question would be, how are you going to bridge the gap between the loan amount and how much the house is actually selling for? Because that there does need to be compensation given there.
Well, let's pause at that for a second, because that's the giant elephant in the room. Everyone, all of the things we've talked about, a VA assumption sounds awesome, right? Doesn't every buyer want one? Yes, please. Where do I get one? And the problem or the issue is, we're not just looking at record high interest rates, 40-year or 220-year record high interest rates. We're looking at a situation with rapidly appreciated loans. It's not that a seller that's been in a home for 15 years is dealing with 40 or 50% appreciation. People that bought in 2019 are sitting on 30, 40% appreciation. So if someone bought that house for $300,000, it's probably worth $450 now. So VA financing, they do zero down. They probably paid that $300,000 down to $280, $285 somewhere since 2019. Home's worth $450. So Gay, we're going to put you in the financing hot seat here. I'm still me, veteran buyer. I want to get in with one of these awesome interest rates. I want you to do the loan. Carmen's tracking properties down for me. They all have gone up a bunch in value. How do you help us? How does that buyer bridge that gap of this big chunk of money that the seller is obviously going to want?
Yeah, so the best way to do it is cash. Just truth be told, because what we learned recently is that if you get a second mortgage to cover that gap, it also must be assumable, which is a very difficult product to find. I've heard that this unicorn exists, but I haven't personally, contacted the particular company that, the bank that offers this, to see what that looks like or smells like. But that is the best way to do it, is via cash. And then, like I said, the other way would be a second mortgage. What am I missing, guys? Or other ways to do it? Is there another way?
No,
Seller carry.
well, yeah, the seller carry is what I was going to talk about. But Carmen,
Seller carry, yeah.
Maybe you and Gary can talk about it. And Gay, from your understanding, then, if the seller is willing to carry that back, does the seller also have to offer assumability in their second, or can theirs be non-assumable?
According to the VA, it also must be assumable. We did ask that question. It also
Because
has
now,
to be assumable.
Now we're stacking a ton of potential risk to a seller. You have
Correct.
a second that has to be assumable and might get passed on to someone else without getting paid off. It would be interesting to know if you could put a balloon in there at some point to protect yourself. Lots of questions come up here. But then, are you going to make sure you get your release of liability? If it's a non-veteran, not getting your entitlement restored. So a lot of thoughts and questions to go through there with that, but that's definitely a curveball. If we have any lottery winners in the audience who would like to make some assumable seconds at pretty good interest rates, it sounds like a little niche that you could get into with that. Because I mean, the reality is most HELOCs, HELOANs are in the high single digits, low double digits. Mm-hmm. So you're getting a pretty good return rate. And that's kind of another piece of this that I would love to talk to someone about. Let's go back to that same situation. $280,000 first. Let's say that veteran timed it up perfectly and they did an IRRRL at the bottom of the market and they're at 1.875. You're drooling to get this sub 2% 30-year fixed, but then you've got $170,000 second or $150,000 second. That's at least a third of the size of that first, up in the ballpark of 10%. Yeah. How much better is your blended rate at that point than just going out and getting your own new VA mortgage, making all homes available to you, all sellers willing to play ball? This is the part of the conversation that I don't like having, because all roads kind of lead back to, you talked about the purple unicorn. A closed assumption transaction is a purple unicorn. We were talking earlier, what Carmen, was it you or was it you, Gay, that said you've actually been involved and seen a few of these actually successfully closed? Mm-hmm. Carmen, you have?
Yeah, I've done quite a few over the last year.
Why don't we go down that route? Because to me, that's a little bit more interesting. What was common among those that made them successful, where we're sitting here kind of pointing out the roadblocks of how hard it is to successfully come to a closed VA loan assumption?
Having an agent that is tenacious and doesn't mind making waves, and because the agent has to be directly involved with the servicer, and a lot of times agents don't want to be because they don't know how to be, because if they aren't familiar with the assumption process, it's very intimidating, and a lot of the servicers can be kind of non-communicative. They don't want to commit to timelines, they don't want to commit to info, and so you really have to push. You have to have an agent that's willing to just get in there and fight. And the other thing is, a veteran has to be willing to do that too, because ultimately they're the ones that are going to be kind of in charge of how things are held accountable. If your servicer is taking longer than the legal amount of time that they are supposed to process assumptions in, which by the way is 45 days, and I can tell you the US code that is written in. I did some digging today and I got the actual code, so we can post it in the comments too. But the veteran's the one that kind of has to initiate that with the RLC if they're having issues, so that the RLC can get involved and make those timelines happen. But without a good agent that understands the process and who also just really knows VA loans, because I will tell you, these servicers don't really understand VA guidelines because that's not their job necessarily, right? Their job is to collect tax money and insurance money and then put it into accounts and pay those out. Their job isn't really to underwrite loans. So
it's an origination and underwriting function. That is not their job. They're not set up and equipped to do it, certainly not at scale. And thankfully, this isn't like COVID forbearances. There aren't a wave of them coming in at one time. But tell us a little bit, without revealing any details of your buyers or the people that sold them the homes, what did some of those look like? How big of a gap were they having to cover, and how did they go about coming up with the funds for the gap?
The cheapest gap I've had was $70,000, and the most expensive gap we had to cover was $287,000. And so I've had 6 of them over the last year, and they all fell somewhere in there. Every single one of them, with the exception of one, it came from a previous home sale. So they sold a home in another state, and then they were PCSing here to Everett, and they used the proceeds of that sale, which they made out pretty nice over the last couple of years, and they used that to bridge the gap. The other people used a gift from a parent. It was wedding money. It was their, like, congratulations, here's $100,000. So, yeah.
Nice.
Yeah, Gay, we talked about it. We talked about cash, but we didn't talk about sources for cash. Most of our veteran buyers are not coming in with huge amounts, and these amounts are large amounts. So a gift would be an excellent source of coming up with that without having that assumability question come into play there.
So and can I just say also, back to Carmen's point about, the process taking a while and, having to be tenacious. And so, usually you're going to start off, if you want to be working with an agent, you're going to need to get pre-approved. So you're going to go to some place that offers loans. Well, when you do an assumption, that person is no longer involved. So it doesn't matter who you get pre-qualified or pre-approved with, unless the really odd circumstance, which probably wouldn't happen very often, but unless it just so happens to be the same company that's the servicer for the loan that you're going to be assuming. But in all other cases, the servicer is the one who now takes over all things to do with the loan. And now your loan officer can be there maybe as an advisor, but they're not the ones that are helping with anything. I mean, they can help as much as they choose to, I guess, at that point, but they're no longer the one originating the loan. They're not the one receiving compensation for doing the loan or anything like that. And so, you might start off with one person, but if you go with you end up assuming a loan, you're going to be with a completely different person. And the other thing I'll say is, not only are these companies, and organizations not staffed and equipped to do the origination, part of the loan, underwriting and so on and so forth, but they also really aren't motivated because they're not making money on it. I think in a lot of cases they're actually losing money. And really, personally, and I'm not trying to, drag anybody, say speak ill of any companies, but they probably are hoping to drag their feet a bit and make you want to give up on the process, so you'll just get a regular loan with them.
Mm-hmm.
Yeah, other than their servicing fee, which most of these, we're talking smaller loans for the most part. It's not likely to be an $800-900 million VA loan that's being assumed. So
Correct.
their servicing fee is very minimal. Whoever owns that loan is probably underwater. They'd love to have their money back and be able to reloan it back out to someone else at 6%. So that's a really good point. So I don't want any of you guys watching at home hearing us say this is a terrible idea, you shouldn't do it, you shouldn't try for it. Carmen's sitting here and says it's 6 success stories in the last year. So you absolutely can do it. Just be prepared. And kind of, okay, you said what Carmen was somewhat saying is that Carmen got to be the realtor and the loan officer in that transaction. The loan officer disappears. There's no origination function in there. It's basically processing paperwork with the servicer who's not good at that. And the only person to do it is your realtor. So not only do they go out and find the purple unicorn, then they were able to butcher the purple unicorn. Is that how the story works? They covered all of the bases. We actually have a non-assumption related question here, but it's a good one. Let's throw this up. Shane Collins, with a beautiful profile picture of a puppy there, says, what is the total entitlement allowed to a veteran? My certificate of eligibility says entitlement charged is $36,000 from a previous paid off VA loan. So there's a couple of kind of questions behind the question there, but anyone want to take that?
Yeah, Shane, I'm not sure if you're still on or not, or if you can kind of go back and forth with us here, but generally when you have 36,000, that's your full entitlement that's available. And so entitlement allowed is a little bit of a misnomer here, because it says 36,000, which normally is a quarter or 25% of the total loan amount. But in your case, because you have the full entitlement available, your actual loan limit, which I think is what you're really getting at here, is what your loan limit is unlimited. It's only limited by your qualification. So whatever you can qualify for, there's no loan limit when you have your maximum entitlement available to you, which 36,000 usually indicates you have your maximum entitlement available.
And I'm sure you guys get this question all the time, because I get it. People look like, why $36,000? I can't buy anything. $36,000. What in the world am I going to do with this? You're like, no, calm down. 36 means you're good. You can buy anything you want.
Yep. Yeah. And entitlement is never the loan amount, right? So that's another thing that people get very, very confused about. This particular number is extra confusing because it's the unlimited number, but any number less than that, or any number when you have a portion, not necessarily less than that, but any number where you have a portion of your entitlement used, so you're now using your bonus tier entitlement or second tier. There's a lot of different terminology for that. But entitlement does not equal loan amount. It's not a dollar for dollar amount. It generally, excluding the 36,000 one, is usually 1/4 of the maximum loan amount. Up to the county loan limit. Anyway, it gets complicated. I don't want to get into all of that. That will be here for next. We could do a whole other. We could do a whole other. We could do a whole other.
I love when the government tries to make things simple. Okay, it's this, unless it's this, but then it might be that.
It's so complicated. It is, but it isn't. Like, if you live in it and you do it every day, it's really not that complicated. But like I said, we could do a whole other live on just entitlement. Matter of fact, I think we have that one coming up. That's like in maybe a month from now or something. We're going to do a whole live on calculating entitlements and how that works.
We'll have charts and graphs and slides.
Yeah, it would be so much easier when you can see it. It's very difficult to talk about.
We need Nathan's shirt. He has a shirt about how to calculate it. I don't know if you guys have seen that, but
yeah, it's awesome.
One quick point on that particular question, and I might be reading it a little differently, but I'm seeing where it says from a previous paid off VA loan, and so I'm wondering if they're saying that 36,000 was charged, not available. And so just one quick point, that when you pay off your loan, it doesn't automatically get restored. Sometimes there's a little bit of follow-up that you need to do in order to make sure that all the I's are dotted and the T's are crossed and your entitlement's fully restored so that it's ready to go the next time around.
I think veterans, maybe they would or wouldn't be. I think they would be surprised how often the certificate of eligibility comes back and it's wrong in one way or another, not restored, wrong name, all sorts of fun and goofy stuff, or just not found entirely. So it's really important that you and your lender get that out of the way super early in the process, because we can always get it resolved, but there's definitely can frequently be some steps in there. I want to move on to a specific type of assumption. We're going to talk about divorce situations, spousal assumptions, all that fun stuff that's going on. I think post COVID, I think the divorce boom is upon us. But before we do that, just your standard assumption, a regular buyer, regular seller, wanting to know it. You guys have anything else to add? Anything you feel like we didn't cover here that would be useful to either a buyer or a seller considering or wanting to know about assumptions?
From my perspective, I would say this to buyers in particular, not so much to sellers, but make sure that you're not limiting your pool of available properties. You know, we're still in many markets throughout the United States right now at a deficit for available homes. Some of the markets that cooled off even December, January, February, March are heating up again, and we're seeing multiple offers. We're seeing higher than list price. So we're seeing, you know, several of these things come up. And it always, you're not supposed to get emotionally involved with with your transactions, but I think that's a problem that everybody in vetted VA has, is that we care so much about all of our clients. We're like, oh, this one really hurt. And so one of the things that I find that hurts is when people try to time the market and wait and then can no longer afford a different home at all. And so if there's a possibility for you to be a homeowner in today's market, and the home meets the needs that you have, really weigh the risk. Do I really want to wait to see if one of these, like Josh is saying, purple unicorns become available? And am I willing to take that risk versus moving forward with what's available in front of me, knowing that that might not be the case? Because I can tell you, you know, everyone here, 15 months ago, the people that waited at that time, there were a lot of people that no longer can get into the market, and it's something that's really hard for us. So I would just make sure that you are aware that there's a risk to waiting sometimes.
And it is, home buying is emotional. You have that component to it as well. You have the logical numerical part of it. What do I qualify for? What am I comfortable with in terms of the monthly payment? So like you said, Gary, in most markets, it's tough. It's tough to, with all options on the table, find a property that makes sense for you and your family today, tomorrow, 5 years from now, so you don't feel pressured to move and do this again. So waiting for an assumable loan, it's kind of a recipe for disaster. Kind of an example that I give, not a veteran borrower here in Southern California. He started out looking at $850,000 homes and offering $840,000 on all of them in the middle of COVID. He's very lucky in that he's very well qualified, but instead of maybe just stepping up and paying $875,000 for one of those houses and a 3% interest rate, he's now looking at those homes being $1,050,000, $1,001,000, and a 6.5% interest rate. So not a veteran there, but that waiting when it's right and it makes sense for you and your family, it's better to wrap it up than to wait for this absolute perfect right home to come along. You want it to be the right one. You don't want to settle or compromise. But let's say you did settle or compromise and your wife is mad at you and she no longer wants to be married to you. Okay, what are her options? What are your options in one of you staying in the home and keeping that loan and the other one not being on the hook?
Yeah, so I'm actually going to let Carmen take this because I think she did some special research on this before. Although I do have a few details, so I'll help fill in any gaps if she doesn't has it. But there's one other type I want to talk about too, and we don't have to do it right now. We can talk about it after, and that is what if the veteran dies. And so I wanted to talk about that one as well. But go ahead, Carmen, and talk about the divorce situation. Because I know you did some.
You had to one up me. I talk about divorce, and you go, "Oh, I got this. I'm going to talk about death."
Well, the only reason why I bring it up is because, of course, I have an agent reach out to me and ask me that question. And so I didn't know the answer. I actually asked it at the VA loan guarantee conference that we went to recently and got a great answer. And I look forward to sharing it. But we'll talk about divorces first because I think that's hopefully more common than death.
All right. So this is the area that I know the absolute least about. So And I freely admit that it's an area I'm been reading in on a lot, because some of the language, being a real estate agent versus a loan officer, from that side of it, is a little confusing to me. So when they talk about release of liability, and unrestricted transfers and things like that, I kind of get that terminology mixed up a little bit. So Gay, I think I am going to have you help me out on this. But when there's a divorce and there's a decree of dissolution, or if I'm understanding correctly, because sometimes a divorce can take like upwards of a year, if there's a legal separation on file, the spouse can assume, the non-veteran spouse can assume the mortgage if they're awarded it in the divorce. But do they still have to go through the same underwriting criteria, right? It's not just an automatic.
That's correct.
They can assume it. They still have to qualify, right? They still have to show that they qualify for that payment.
That's correct.
Okay. Now, the unrestricted transfer part, can you explain the difference to me on that? Do you know by chance?
So I think where are you reading that? I'd love to be able to read the whole thing.
Chapter 5, it's going to be section 6, and it's page 5-40, actually. It talks about a transfer.
Really close.
Okay, transfer resulting from a decree to dissolve a marriage or legal separation, by which the spouse of the borrower becomes the sole owner of the property. And I guess I'm a little confused sometimes when this isn't saying that they don't have to undergo creditworthiness. It's just the release of liability is automatic at that point.
Yeah, so I know when we were at the VA Lenders Conference, this is where they're talking about death, right? For example, so if the veteran dies, then they could do what's called a transfer of ownership. So I'm not sure if that's the same thing. Josh, do you know the answer to that on the unrestricted transfer piece? Yeah, so maybe some of our listeners, hopefully, I know we have a lot of our team from vetted VA will jump in sometimes on this, but I know that there are certain situations where there can be essentially an unrestricted transfer of property, or in this, like what they called at the VA Lenders Conference, a transfer of ownership, where essentially, I'll use the example of when the veteran dies. So the veteran and their spouse own the home, the veteran dies, and basically by law, the in most cases anyway, unless there's something that precludes that, like it's being passed to someone else, the transfer of ownership will just pass to the person who legally or rightfully is the heir or next owner of the property. So for example, when you have the right of survivorship, like if you're joint tenants with right of survivorship, when you do the actual deed, then, in the title work, then that will, automatically transfers, the transfer of ownership transfers to the next person. So I think that may be what they're talking about. But in the case of divorce, I'm not 100% sure how that comes into play, other than, that's what the court is ordering here. I think what they're really talking about, though, when you look at it, is they're talking about it doesn't require prior approval from the VA. So you don't have to go to the VA first and say, Mother, may I do this transaction? The servicer can just start working on the transaction, because it is, by law, there's some unrestricted transfer of ownership that it falls under. And there's a whole list. That's that list that you were just telling me about on page 5-40, a whole list of things there.
I also wonder too, there's a stipulation of a seller must apply for approval of the transfer prior to completing the sale. So I wonder if possibly the court order supersedes that in a certain sense, like on a traditional assumption. I think there's a lot, like you said, there's a lot of things that can be a possibility, but if you look at 524, it's on that section as well that may be worth looking at too.
I'm going to interject for any of you watching at home. If you ask, what does it mean to be vetted? What it means is we've all been proven to be nerds and guideline geeks who like to look up arcane government documents and try and figure out what the geniuses we're actually talking about, so we can get you correct answers. So this is not uncommon amongst a gathering of vetted VA members, that we'll find very little random details and figure out exactly what it means for you. And the part, again, I say this almost every week, that surprises me. No matter what crazy, weird circumstance comes up, I can go out, throw it out to the group in our private Facebook chat, and someone has been through it and has the answer. So that's what we're here for. If you have questions, throw them up. But you can see a lot of these things, answers are not super clear. And it's open to interpretation. And this is what the group is here for. So if you have a question, throw it out in the group, come here, throw it up in the chat, reach out to one of the pros on the map. Because if they don't know, if you reach out to me, I don't know the answer to this, but I've got a whole Rolodex of these folks who will jump in and we will get you the right answer.
Yeah, I mean, to Josh's point, in our case, Carmen and Gary are agents. I am a loan officer, but I don't process assumptions, right? So that is for the servicers to do. And so unfortunately, I can read what's on the paper, but interpreting it's a whole different thing because I don't actually do it. So apologize for that. Josh is the same way, right? So apologize for not being able to sort through those things precisely. But bottom line is it can be done in a divorce. I think to Carmen's point, you can go ahead and pick back up what you were saying, Carmen.
Oh, I was just going to say, to kind of bounce off of Josh's vetted comment, is that we're not always going to know every single answer because the VA guidelines are vague on purpose, or not vague, they are limited on purpose so that lenders can choose their own risk tolerance of what they are willing to take on as far as risk and liability, right? But in the case of assumptions, it's a little bit different. And so some of the guidelines are a little bit conflicting, I think, when you read them. And so you have to have a really good context of what they mean. So I've actually emailed the RLC, my Denver, which is my regional RLC for my state, this morning, and I was asking them for clarification on examples of unrestricted transfers, and specifically talking about divorcing spouses, and to see if they could give me examples, but they weren't able to get back to me before the live tonight. But I will post the answers I get in the comments of this live so that anybody that's watching that wants to know a little bit more will get you clarifying answers for sure on anything that you're asking, in addition to the stuff that I asked for today, because we want to make sure that we're answering your questions fully and accurately, not just saying something we think. I would rather admit that I don't know and dig for the answer and have you wait a little bit than tell you something that just isn't true.
Much better to get the delayed correct answer than a rapid incorrect answer, which a lot of people will give you. We actually got a couple questions here. Our viewers tonight were waiting till the end of the show to throw their questions out. So Shay has a question here. This may have been discussed, but how does transferring a loan to my children work with a VA loan in the event that I pass? I currently have a conventional and want to go into a VA loan. So actually, no, Shay, she has a conventional loan. She's wanting at some point to refinance it into a VA loan. If it were a VA loan and she passed, home goes to her children. We're back on Gay's topic here of the night of dying. So Shay dies and leaves the house to her kids. Are her kids able to assume the loan? Can they just leave the financing in place? What does that look like in that situation?
Yeah, so I'm pretty sure that the answer is that it just stays in place. Like if they're not doing anything with the home, like trying to sell it, or even if they are, I mean, as long as they're not trying to refinance or anything like that, just the VA loan just continues. They just start making payments. They just keep paying on the loan.
Yeah, nothing there to worry about other than continue to meet the obligations under the loan, just like you have.
Correct.
They can be the house can still be foreclosed on under your heirs, even though they're not obligated by the loan, because the deed of trust secures that to the property with those obligations. So another one here that the last one was morbid. This one's fatalistic. Are VA loan eligible clients perpetually more likely in the coming half of the year to be successful reaching goals for accessing mortgages and homeownership versus other products that civilians are competing against us? So why don't we just go around the horn and what are you guys seeing in your markets? What do you feel? Veterans have had a hard time. We came off of a market here where everyone wants people to remove appraisal contingencies, get their loan approved in 2 minutes if they have a loan contingency at all. What are you guys seeing in your markets? How does that look? And are veterans going to have any better time of it the second half of the year than we've seen here in the first half of the year? Gary, you want to kick us off?
Sure, absolutely. I think first and foremost, it's about education. It's education, education, education. And it's not necessarily education for the buyer consumer. It's education for the listing agent and education for the seller. And so you need a team who advocates for you and understands all the many benefits of a VA home loan. Because when you're comparing it to anything other than cash, cash is its own, animal there. Like, cash is king. There's a reason why there's that saying. Like, if the cash is going to be dollar for dollar the same, most likely the seller is going to accept it because there's very little risk. It's just, let's close this, we can get it done very quickly. But when it comes to loan programs, the VA loan program has so many benefits, and we can prove that statistically, that we have a higher close rate using VA loans than conventional loans. And so it's one of those things where it's about that education and about getting in front of the listing agent prior to it being presented to the seller, so that there can really be an advocacy for that, as there's a lot of misconceptions about VA buyers. We see them a lot in our group. You can see people being frustrated, and then we invite other professionals all the time to give us a call. Like, even if we're not working with you, we want veterans and homes. Let us help you to see why the VA home loan is such a powerful product, and you're much more likely to be able to close this transaction choosing our VA buyer than you are some of the other loan programs. And so, to answer your question, it's going to come down to how much education is going in front of your offer, and that's going to really be the difference maker from my perspective as to whether or not your property or your offer will get accepted either today or in the later half of the year.
And if you go to YouTube and look through the archives, we did an entire hour on that, of everything that Gary's talking about, all of the things you can do to stack the deck in your favor as much as possible. It doesn't guarantee success. And to that point, I've got a client right now, conventional borrower. She's in the $700,000 price range. She's putting $400,000 down. She got beat out by a cash offer on 2 different properties this last weekend. So don't feel like it's just because you are VA. I mean, $400,000 down on the $700,000 property, that's as close to a sure thing as you can get. To me, top dollar would weigh out, but cash is still talking loudly in that regard. With that, Carmen, did you have any thoughts on what the next 6 months brings to buyers?
Man, I wish I had a crystal ball, right? That would be great. It's real tough out there right now. Like, I think the whole country kind of saw this lull over the last few months, and now that spring market is back, we're seeing that interest rates didn't really matter. We're still getting multiple offers on some homes, and people are finding that really frustrating. And so am I, right? Because I represent both buyers and sellers, but exclusively military and veterans. And so I feel it on both sides. I want my sellers to get top dollar, but I don't want my buyers to be put in a place where they're house poor, where they're regretting the purchase that they made. But in the next 6 months, it's not a major election year, so I think that's working in our favor. In 2024, come August, September, October, November, we're going to see a slowdown again, because we do every election year, right? That's just how it is. I just don't know what rates are going to do. But to say go off of what Gary was saying, like, that education component is critical. One of the things that maybe you can ask your agent to do if you're in a competitive market is, especially if I'd say only if they work with a lot of VA clients, is to show the MLS numbers that they've closed with a VA loan. Show them to the listing agent as your buyer's agent. Show them and say, these are what I've closed, and these all closed at or above list price. They closed without any additional requirements. But your agent has to be willing to dig out their own data. That sounded weird. Put together their own data to be able to show to listing agents, like, hey, VA loans are awesome, and here's why. And if for some reason we do get a Tidewater or a low appraisal, known as Tidewater, issued, that's not necessarily a bad thing. It's the only loan type that provides 2 options, 2 possible solutions to correcting the appraisal amount. I mean, it's a phenomenal loan product. It's a phenomenal process. Don't limit yourself also by some of the online marketing and stuff that you're going to see about, oh, this program gives you back money if you use their network. Don't fall for that stuff. That doesn't make them an expert. It does make them an expert, asking them questions about how many VA loans they close, asking them for times that they've gotten Tidewater fixed, asking them for how many military and veteran clients that they represent every year. Those are the people that you want to work with, not somebody that has military in their name.
Absolutely. I will go so far as to say, like, someone doesn't have to be in the vetted group to be an expert on VA.
Right.
I know people down in the San Diego market don't even know what vetted VA is, and they're amazing, help lots of veterans. You need to work with someone who helps veterans, either active duty or retired, regularly, because it's, what I will say is the VA loan is really simple. It's real easy, but there's also lots of nuance and crazy gray areas that it's very easy for someone who's done loans for 6 months to go, oh, VA, I can do that. I kind of see how it works and know that. But there's a million little things and nuances that you want both your realtor and your lender to be able to step in and be making calls. When Carmen writes an offer, the lender should follow behind that and say, hey, it's a VA loan. Here's why it's awesome. Here's why they're very well qualified. Here's what we do with our VA loans. Here's how far we are in the process. And be able to answer any questions cold, not stutter and stammer and go, well, I think, well, kind of this. You should know. I mean, we talked about, we don't have all the answers here, but you should know the VA program cold. Like, none of the basic questions are going to stump someone. So, Gay, what's the view from Colorado? What do you think of the next 6 months for VA buyers?
Yeah, so Colorado's particularly is an interesting market because there's this huge, in the center of the state in Colorado Springs, it's a big, huge military location. So tons of VA here, usually not too difficult to get your VA loan accepted because a lot of people are very familiar with it. Your VA offer accepted. But Denver's a whole different animal, and it can be very difficult up there because there's a lot fewer agents that are familiar with it. Again, back to that listing agent side, I think we've all talked about that. That's where the education needs to come in. And if you find yourself making an offer on a home with a listing agent that's uneducated, to Carmen's point, it's really helpful if your agent that's representing you is very knowledgeable and is willing to, kind of fight for you and make sure that they are, showing how successful they are with VA loans. But also, to your point, Josh, that there isn't a single offer that my clients make that I'm not calling the listing agent and having a conversation with them. And honestly, this is regardless if it's VA. It doesn't matter. I call always, but particularly if it's VA, because I want to make sure that the agent is comfortable, and if they have any questions, that we're answering them. And that starts with a great relationship with the buyer's agent. So they're the ones that are going out to the property, viewing the house with the veteran. And so if they're familiar with the minimum property standards, they're already, potentially can help me and themselves when they're talking to the listing agent, quell any concerns that they may have about, oh, well, it's not going to pass the VA inspection. And I'm just using that terminology because that's the words that they always use. It's not going to pass the VA inspection. Well, it's not an inspection, blah, blah, blah. Anyway, but it is very helpful if your team is working together as one to help just ease any concerns that the other side has. And to Carmen's point, I'm telling them how many loans I've closed, that I don't issue pre-approvals without, doing full, I do pre-approvals, not pre-qualifications, right? Mm-hmm. Just answer any questions that they may have. And the second they give some sort of, oh, well, I heard this about the VA loan, boom, you got to have the answer right there. Send them the, VA Mythbuster, guideline, the document that Vetted VA put together to help bust those myths, and really just help, just let them know, hey, this is a great product. You got a really high likelihood of this loan closing. Here's the data to support it. And, by the way, we're probably going to get it done faster than you would a conventional loan. In this market, that's absolutely true. I can close a VA loan much faster than I can close a conventional loan here.
And that's still one of the big myths. People think the VA has to approve the loan. It's going to take forever. I'm not going to be able to close my deal. What are we talking about? This is in 1972.
Yeah.
Well,
yeah, but I think VA buyers are in a great position if they've got the right team on their side.
Absolutely. It's always important to work with experts in this market more than anything. Like, what I would say over the next 6 months, I look at this, I think we should all be prepared to expect something real similar to what we've seen over the last 2-3 years. Everyone thought we were going to have this sea change. Gary and I were talking about this before we came on tonight, that rates would go up. There would be less buyers competing. So you'd be able to go in, negotiate on price, get some seller concessions, not be in multiple bidding situations. For a million different reasons, supply is constrained and is likely to remain constrained. We talk about what happens with interest rates. Let's say interest rates come down. That's going to bring more buyers back into the market. More sellers. There's sellers that are on strike because they don't want to give up their awesome rate for the current rates. So as rates come down, there'll be a few more homes available, but a few more people to compete against. So a long way of saying, if you and your family have decided to buy, get with the team, make the decision, do the work, and you'll get into a property. It may not be the first one, it may not be the fifth one, but I had a client last year at 31. The 31st time was a charm. So just be prepared, and you too can get into a home. We do have a couple of questions here, so I wanted to get to these. This one's actually pretty easy. Shay is back and says, does the VA have any programs or additional insurance in the event of my passing for the loan to be paid in full so my children won't have to worry about the cost? As you guys know, every time we close a loan, every time you guys sell a house, they get bombarded with stuff saying, hey, life insurance, $10 a month, and we'll pay off your house if you're going to die. It's a very specific type of life insurance. It only does one thing, pays off your mortgage, and it's really expensive. But you guys know VA doesn't have any special programs or anything that you're aware of in those regards. I would say just have a good life insurance policy, a general life insurance policy. Your kids will then be able to do what they need to do, whether that's pay off the house, pay the bills, pay the mortgage. Any specific type of life insurance that just pays off your house is going to be super expensive. So this is a long one. I'm going to try and talk fast here. I observed a lot of concerning statements in the group about making large purchases right after home approval with keys in hand. Are people aware that any unforeseen utility failure, appliance replacement requirement, or other circumstantial issues arise as seasons change? What is a standard practice to avoid house poor and over borrowing right after entry to a home? I think kind of the big picture thought there is it's almost impossible to buy a house, close on a house, and that be the end of your checkbook. It's oftentimes the start, whether that's carpet, appliances, drapes, new furniture. It is very difficult to buy a new home and not go, hey, I need something new for this new space. And the viewer here is specifically asking, what if your furnace goes out? What if the pipes break? So all of those options. What are you guys' thoughts and advice to a buyer in terms of what to be prepared for and not overspending in terms of closing costs and not being cash poor when they get into the new home?
I mean, I just think any good mortgage advisor is going to be, helping coach their clients to make sure that they've, first of all, they're not left with zero, which the VA loan doesn't allow for anyway because of the residual income calculations. But nonetheless, I think that, they're going to be helping coach them through, ensuring that they have, cash left over, not only in savings and checking account, but also at the end of the month to make sure they're not overextending themselves. And, I'll let the agents speak here, but, I think agents are also going to help whenever they're looking at the house and showing the house and helping guide them from that inspection that hopefully everybody's getting. Highly recommend always get an inspection, a home inspection. You're going to have an idea, a pretty good idea from just the general inspection. And then if you have things that, like if you have a really old roof or a really old furnace or, things like that, or if you have sewer, septic, you might want to get some very specific and unique inspections, and a little bit of extra cash up front spent on those inspections, I think will go a long way in helping foresee what could be problems in the, short term, moving forward after you close on the house. But I'll definitely let the agents give their perspective on that as well.
From my perspective, the advice I always share with all my clients when we close is just be prepared for the first year to be a continual time of expense. Like the first year of home ownership is challenging for most people. Even you get into a home, you might have a solid home inspection, but your usage of the home may be very different from the previous person's usage of the home. And so maybe, you run warm, and so you like your air conditioning at 68 degrees, where the other people that owned it, they ran cold and they liked it at 78. And so that those extra degrees over 5 months of time, it's putting a lot of extra use to that HVAC system that it wasn't used to previously, and now it's broken. Or maybe there was restrooms that weren't being used. It was a couple that their kids have long gone and they decided to downsize, and you move in with your family of 4 or 5, and all of a sudden things are being used a lot more and things break. So my recommendation is always to think, don't have a sigh of relief, rejoice and celebrate that you're now homeowners, but don't take the foot off the pedal on your financial goals, and really realize most likely we're not out of the woods yet. After a year, maybe we can rebuild at that time, but there's probably going to be some unexpected expenses coming up in this next year. So just be prepared for that.
So for me personally, I buy every single buyer that doesn't buy new construction, because with new construction, there's not, home warranties really that make sense or are available, but I purchase a home warranty for every single buyer that buys a resale, because I don't feel like they're always worth it for the buyer themselves to purchase it, but it's a nice gift that I like to give that does give some peace of mind for 1 or 2 years, depending on the policy that you purchase. And the deductibles on them are super low. So like $50, $75, or $100 on average. So if the furnace were to go out the first year, $100 and you get a new one. But you can also ask the seller to pay for that too. Or if it's just something that you're like, you know what, for $350, I want this home warranty, you can get a home warranty yourself too. You don't have to go through the transaction to do it. But they're not a fail safe, right? They don't always cover everything, but they cover quite a bit of the things that could potentially come up in that first year. So I do think if you can get that home warranty covered, policy covered for the first year, it's worth asking for and doing. The other thing is, I don't want to say common sense, because that's harsh. That's not really what I mean, but really look at the things that you actually need to have. Because if you buy a new house and then you go out and fully furnish this whole thing with brand new furniture versus some nicer quality kind of used furniture, yeah, it's going to limit your funds to real emergencies that might come up. And so it's probably not a good use of funds, but that's going to be an individual thing that you want to do, I guess, whatever's most important to you. But that first year or two in the home, you don't need brand new stuff. It's nice to have brand new stuff. But I didn't have brand new stuff until I was like 35. So we made do to make sure that we had money for emergencies. So I think realistic expectations on some things too, because once you close, you can take out all the credit cards you want to take and finance all the new stuff you want to finance or whatever, but does it make sense? And do you have anything left over in the case that there are those big emergencies? Because you don't always, let's say something happens with your roof, you don't necessarily want to call your homeowner's insurance over $2,000 repair, right? Because now you just got put on their radar. So your policy might get jacked up, and that's not going to be good for you either. So realistic expectations on what you need versus what you really want, maybe.
Mm-hmm. One thing that I see a lot of times in our group and just in business in general is this misunderstanding that when you become a homeowner, almost always anything that happens in your home is now going to be your responsibility. And I think that that's different than most purchases. And so we'll see a lot of times questions like, this went wrong, like, who's responsible? The home inspector didn't catch this. And there are rare occasions where there is a third party that is responsible and liable. And that's if someone is willingly giving you misinformation, or if there's any type of willful neglect. So those two things, they do exist, they are real, but they're very uncommon. And so a lot of times, we'll see, and I'm sure that everyone else can kind of chime in on this, but people get in, they get really excited, like, the first thing I'm gonna do is, it was Memorial Day, Home Depot was having a sale, and I looked in the back of the store, and they had some cabinets. So I pulled the cabinets out of my bathroom to put these new ones in. And when I pulled it out, I found this black stuff back there. I'm really upset about this. There's mold. Like, who do I call? Do I call the home inspector? Do I call the real estate agent? Who's at fault for this? And the truth is, there just might not be someone that's at fault. It's just the way that it is. When you took it back, nobody could see behind there necessarily. Maybe there was a leak going on for the longest time, but it was the kids' bathroom and the parents never used it. And 5-year-old Jack and 7-year-old Susie, they had no idea what a little drip meant. They thought that it helped them go to sleep. So it's one of those things of just being able to go in with the mindset of, okay, when I get those keys, it's time to celebrate, but also know that the buck might stop with me on a lot of these things. And so I need to unfortunately be prepared for that mentally as well as financially.
So we try to keep these to an hour. We're a little over an hour right now. We got one last question to get to, and I like to go around the horn and let everyone have their final words. So this is a pretty easy one. I'm going to let you answer the question, Gay, and then start us off with your final thoughts, and then we'll go to Gary and Carmen can close us out. So the question is, can VA loans be used to purchase businesses?
Not just a business. You can have a VA loan, purchase a residence that has a business attached to it, but there are some restrictions on the amount of the property that is associated with it, and you can't use any of the income from the business, and so on and so forth. So there's a small caveat where you can do it, but the overarching answer I would give would be no.
Perfect. And any final thoughts, words of wisdom, parting shots as we go?
Yeah, so I still want to talk about real quick one little thing about if a veteran dies, and there's that transfer of ownership that I was talking about. The one thing that I didn't say is the loan still stays assumable. So as long as the loan is still a VA loan, even if the veteran has passed, that loan stays assumable. So I thought I would share that. I thought that was very interesting. I didn't know the answer to that. I had that case come up and somebody asked me that question and I had no idea what the answer was. Then I asked the VA and that's what they gave me. But yeah, so just final parting thoughts, VA loans being assumable. One thing, and maybe you guys talked about this in the very beginning, and I think Carmen alluded to it for sure, or maybe it was Josh, but VA loans must be assumable. It's not an option. It's not, and servicers must offer that option. That also is not an option. They can't just say, yeah, we don't do assumable loans. They can't do that. If you run into that situation, let somebody here in Vetted VA know. We'll help you get to the right people to report that back to the VA to make sure that they're aware that a servicer isn't, offering the loan to be assumable. Because that is a requirement. But it's an amazing feature of the VA loan, and one that has resulted in some pretty amazing, situations for folks out there. Just make sure that if you are looking into that from both a seller or buyer perspective, that you're chatting with somebody who's either done one, like Carmen, or who has enough background that can offer you some advice on what to expect so you're fully prepared and you're not hitting some roadblock 2 or 3 months down the road, 6 weeks, 2 months, something like that down the road, that derails the whole transaction.
Or when you do hit that roadblock, which Carmen says is going to happen, that you have a conductor driving the train through the roadblock.
Correct.
Gary, how about yourself? What do you have for final thoughts?
Absolutely. My final thoughts are really the motto for Vetted VA, right? We have trust but verify. And so I just encourage anyone that's looking to do any type of real estate transaction or VA purchase with a mortgage, make sure that you trust, but you're verifying what's being said by the professionals. One of the beautiful things about Vetted VA is that there's people that are always watching us and we have ongoing testing and et cetera to make sure that we're being held accountable. And that's part of the verification process. But I wanted to point out just 2 things here. One, and you can go back and you can look, you can see my face and the giant smile that I got with Gay's answer. But, Josh had asked, what about, can VA loans be used to purchase the businesses? And she's like, not just a business. And that little tiny difference is what makes a world of difference. She didn't say no. It's not just a business. And she went on and showed how can this VA benefit be used in some unique possibilities. And the same thing with Cameron. Cameron's primarily a real estate agent, and she knows the VA handbook inside out and backwards. And so she's not getting paid to do any of the loan assumption as a loan broker, but is going in and able to advocate because she knows the VA handbook inside out and backwards, and she can go as a rock star and say, hey, X, Y, and Z is what the handbook's saying. Help me to move this forward. So I just would really encourage everyone here to remember to trust, but verify what's going on so that you can be served well.
All right, Carmen, successful closer of VA assumptions. You get the final words of wisdom for the night.
I had 2 points of clarification I feel like I should throw out there from other things that I had said. That 45-day requirement, it is law. So if you go to Title 38 of the U.S. Code, it's called Veterans Benefits, and then you go down to Section 36.4303, and you go in there. That lines out where it says 45 days. So it is law, but it's law specifically that states they have 45 days to complete the determination of whether the person is eligible to assume the mortgage or not. And then there's an appeal process, by the way. There's an appeal process, and I don't know how to do it, so I don't want to comment on it. I just want you to know that it is there, and I'll get some more info. We can share info on the appeal process too. But it's just 45 days to get to have the servicer decide whether you're eligible or not to assume that mortgage. There's still the actual closing timeline that can happen after that, but essentially that determination is the clear to close, and it only takes a couple days after clear to close for you to close the loan. So it should be about 50 days max. Everybody should be able to get this closed in 45 days. There isn't really a reason not to get it closed in that amount of time. 50 if you're allowing for days afterwards for loan docs to be signed and notaries to be scheduled and such. The other thing that I wanted to add is a mistake I made on the very first loan assumption that I did. The escrow accounts, where the property taxes go every month out of your mortgage payment and your homeowner's insurance go every month out of your mortgage payment. I did not know that you have to, as the seller, request to be refunded your escrow account. So my very first sellers lost their escrow account because I didn't know that you had to request that. So it wasn't put on the master settlement statement that the borrower is going to replenish that escrow account so that my seller could be refunded it. And I felt awful. So if you're in that situation, make sure that the servicer puts on the settlement statement to your either escrow company that's handling the transaction or to your attorney that's handling the transaction, that those escrow accounts are settled out so that people are refunded and charged accordingly, because that was a tough lesson to learn.
So can I ask a follow-up on that, Carmen, real quick?
Yeah.
So not only did they not refund it, but so I assume that means then that they did not set up or charge escrows in the closing to the buyer as well? Correct. Yeah. Did they set up escrows at all for the future, or
no, the borrower took over the escrow account as it was.
Yeah, but I guess what I'm saying is the mortgage payment, did it have escrows included in it?
Mm-hmm. Yes.
Oh, okay, gotcha.
Oh, yes, good point. Yes. Yeah.
One quick thing, Josh, before you wrap it up. This is what it looks like in vetted VA until all hours of the night. We're up at 1 and 2 asking these questions back and forth. And that's what's beautiful about this community, is what these ladies are demonstrating right here, is that we'll continue to dive down until we can get the answers to serve you. So please always come back to us. But I just thought, I was like, the viewers need to know this is literally what it sounds like, and why our spouses can say, can you turn your phone off? Because it will go off all night with us chatting back and forth to serve veterans. So that was a great example of that.
Well, hey, we appreciate the three of you being here, sharing your knowledge and expertise, and even the behind-the-scenes view of debating the tiny details of the VA guidelines. But most importantly, thank you for watching. Those of you at home, thanks for asking the questions. It's really the purpose. We love to cover a big topic in detail, and it keeps the show moving forward. But I'd like to get your questions answered in a format where we can go a little more detail, a little more in depth than we can just in text-based answers in the Facebook group. So thanks for being here. We'll be back next Tuesday with a new group of pros, a new topic, and we'll see you next week.
Bye, everybody. Thank you.